Hey everyone, it's Julie here with TipRanks. Today we're taking a look at two strong buy stocks in a sector that is looking good for 2025. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks in the healthcare sector. Now in 2024, the healthcare sector hit a rough patch. While the S&P 500 soared, the healthcare sector barely moved. Why? Well, uncertainty loomed large. There was fears of new regulations with the upcoming new administration, inflationary pressure, and labor woes. But fast forward to 2025 and the tides have turned. The healthcare sector is now leading the pack as one of the best performing sectors year to date. Behind this comeback, we have investors turning away from these high-flying tech stocks to some more defensive areas, along with some strong earnings reports and some favorable future outlooks. So today, we use the TipRanks stock screener to find two strong buy stocks in this sector. Of course, found right at the top of the screener menu, today I was feeling pretty picky, so we put in quite a few filters. I wanted an outperform rating on the TipRanks Smart Score, double-digit upside potential, and of course a strong buy consensus, focusing in on the healthcare sector with low PE and PEG ratios, and that gave us a list of just 6 stocks below. So today we're going to dive into a couple of these strong buy healthcare stocks, what it is that they do, and of course what those Wall Street analysts are predicting for the stock's future. Just before we get into that, this is a reminder that TipRanks is currently having their end of quarter sale. You can unlock premium research tools at 40% off. So head on over to the TipRanks website or follow links in the comments down below to take advantage of the sale now. Now let's jump right into these two strong buy healthcare stocks. We're going to start off today with Encompass Health. They trade under the ticker EHC, currently priced at $101. The stock did gain 32% over the past year, and in the last 3 months is up 7.5%. Currently on the TipRanks Smart Score, they do score a 10 out of 10. Encompass Health provides facility-based and home-based post-acute healthcare services across the United States. They operate in 2 segments with their inpatient rehabilitation and home health and hospice. On the inpatient side, they provide specialized rehabilitative treatment on an inpatient and outpatient basis to patients recovering from different conditions, while the home health and hospice segment provides home health and hospice services primarily in the Southeast and Texas. Near the start of February, they came out with their latest quarterly report, where they saw both an earnings and revenue beat. Looking forward at 2025, they're now targeting $5.8 to $5.9 billion in revenue as they look at expanding. They saw significant growth in revenue, EBITDA, and Medicare Advantage discharges. And looking forward in 2025, they're planning on 7 de novos and 1 satellite hospital with 100 additional beds. While there are some headwinds, such as increased group medical costs, the overall sentiment from the quarter leaned positive due to the robust financial metrics and their strategic growth initiatives. Following that quarterly report, we of course had several analysts weigh in, with some of them increasing their price target. That includes one analyst from KeyBank. They noted the impressive Q4 results, punctuating a strong 2024 and reinforcing their positive long-term thesis. They continue to view Encompass Health as an attractive growth stock that is insulated from ongoing policy-related uncertainty. And 6 other Wall Street analysts seem to agree, as the Encompass Health stock does come in as a unanimous strong buy. With an average price target of $117, the upside potential would be about 15%. Looking at those price targets down below, we have a fairly close grouping here. Our low end is 110 for an upside at 8.7, while our high end is a couple at 120 for an upside of over 18%. And for our second strong buy healthcare stock, we have Tenet Healthcare. They trade under the ticker THC, currently priced at $131, having climbed 28% overall in the past year, up 2.8% in the last 3 months. They currently score an 8 out of 10 on the TipRanks Smart Score. Tenet Healthcare is a diversified healthcare services company operating a network of hospitals, outpatient centers, and healthcare services across the U.S. Their core offerings include acute care hospitals, ambulatory surgery centers, and urgent care centers, providing a range of medical services from emergency care to specialized surgical procedures. They also manage healthcare facilities through their subsidiary, United Surgical Partners International, and offer healthcare management solutions through their Conifer Health Solutions segment. Now, they did come out with mixed results for their last quarterly report, But looking ahead at 2025, they are targeting about 7% adjusted EBITDA growth as they focus on ambulatory expansion. They reported operating revenues of $20.7 billion, and their full-year adjusted EBITDA margin improved by over 200 basis points. They also deleveraged their balance sheet and saw significant share repurchase as they bought back approximately 14% of their outstanding shares for $1.12 billion since the fourth quarter of 2022. They also shared that the sale of 14 hospitals resulted in the reduction of $114 million in adjusted EBITDA. Just yesterday, we heard from an analyst at Jefferies who reiterated their buy rating on the stock, noting that despite political and regulatory uncertainties, they believe Tenet's current stock valuation is significantly discounted compared to its fair value. They've demonstrated effective management of expenses, and the company's focus on free cash flow generation and strategic share buybacks is seen as a positive move to enhance shareholder value. Tenet Healthcare has attracted 12 current analyst ratings and almost comes in as a unanimous strong buy with 11 buys and 1 hold. Analysts' average price target comes in at $174, and that would imply an upside potential of 32.5%. Looking at those price targets down below, our low-end price target is a hold from back in February with an upside of 14%, while our high-end price target is several at $185 for an upside of over 40%. So that is a quick look at 2 strong buy stocks in the healthcare sector. Let me know your thoughts on these companies and which others in this sector have caught your eye lately. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.